Yeah, the YouTube's stream is started. Good evening, everyone. I'm Naveen from Economica. So this is our econTALK 3. Here we are with Karthik Rangappa, who is the Vice President of Education Services at Zerodha, the largest stockbroker in India. He's the man behind Zerodha Varsity, one of the largest freely accessible financial education resources on the web. And Zerodha Varsity has an extensive collection of financial content on stock markets and personal finance, providing an in-depth understanding on stock trading, investing strategies, and practical tips in a simplified manner to make one successful stock market participant. He holds an MBA in finance from EDHEC Business School, France. He is an investment professional experienced in financial modeling, valuation, equity derivative strategies, and portfolio analytics. Now I let the floor open for Karthik sir. So he'll speak for maybe around 10 minutes, and then we'll start with a question and answer session.
Sure. Thank you so much, Praveen, for that nice introduction. Just one small correction there. I don't have an MBA degree. I haven't done an MBA. I studied Masters in Science from EDHEC. So,
Okay. Sorry for that. Yeah.
okay, no problem. But a lot of people actually think I have an MBA, but I don't have one. Uh,
Okay.
probably because MSc is not really a popular a finance course as such, I guess. So, but anyway, so I'm not
Yeah.
an MBA,
Sure.
right? Sure. With that apart, I thanks for the intro. I would also like to introduce Zerodha here before we proceed further. I don't know how many of you are familiar with Zerodha. Some of you may not have heard about us. We are a stockbroking firm based in Bangalore. What started out as a small five-member team today has grown into a thousand odd member team. We are a member across the National Stock Exchange, Bombay Stock Exchange, multi commodity exchange. We are also a depository participant with CDSL. We are today probably one of the largest brokers in terms of trading activity on the National Stock Exchange and the Bombay Stock Exchange. We also are the largest stockbroker in terms of active clients, right? So with that introduction, I would like to uh, kickstart today's event. I'll try and speak uh, less so that we have more time for what we've actually planned. It's a Q&A.
Sure.
Right. So the topic for today is personal finance 101. Uh, so keeping that in mind, I would like to talk about uh, the absolute basic stuff, right? I guess most of you here attending this webinar are students about to start or just started your careers. So probably this is the right time to talk to you all about these absolutely essential things that you need to do uh, in your financial journey. Right? So one of the most important things that people forget to do uh, is to is not to get an insurance. Right? I understand insurance is a very boring topic. It's very complex, and it's people tend to not talk about it and push that away for a later date. But don't do that mistake. All you need to do is get two things in place. One is your health insurance. The other one is your term insurance. The sooner you do, the better it is. I was just reading a Twitter thread recently, which kind of lay down all the essential things that you need to keep in mind while buying a health insurance. I'll probably share that link with you after this talk. But you can pick pointers from that to identify the right health insurance that you need to get, right? So get a health insurance, get a term insurance. So keep your Sort out your insurance early on in your careers. Don't make the mistake of buying an investment product that is linked to an insurance, right? It helps to a certain extent to think about insurance as an expense. Treat that as a mandatory expense and get that in perspective, and get that sorted out earlier in your career. So that's fun. Now, most people, um, when they start their careers, they're clueless uh, about building an emergency corpus. Once you have your insurance in place, the next thing that you need to do is to build an emergency corpus. Right? Now, what is an emergency corpus? An emergency corpus is nothing but that small little savings that you've got, which will help you tide over the rough times that you will encounter in your life. Right now, there are multiple templates which tell you how much to save for your you know ret- uh, how much to save for your emergency corpus. It ranges from textbook definition of 6 months of expense to all the way to 36 months of expenses. In my opinion, there is no right or wrong answer to this, right? So it all really depends on your lifestyle, your personal situation. For example, you may have elders in your family, uh, and there could be a situation where you may have to hospitalize them, right? Now, to hospitalize, although you'll have an insurance, if you take them to the hospital, they'll expect you to give an upfront money, which will later be reimbursed, right? But if you don't have that cash to pay upfront when you visit the hospital, uh, uh, then obviously the treatment won't happen. So you need to think about those things as well in your when you're building an emergency corpus. For example, let's say you use a laptop and the laptop breaks down. Along with, let's say, your TV, maybe lightning strikes. It has happened so many times here in Bangalore. Rainy season, the spike buster goes for a toss, and all your devices get affected. So that means to say, suddenly you are left with a huge expense. You need to buy a laptop, you need to buy a TV, right? So buffer in for those things as well. And when you build an emergency corpus, think about the most expensive replacement cost of that. Think about elders and think about uh, hospital charges, right? So, so keep that in perspective when you're building an emergency corpus and lay down, figure out how much you need. Don't go by the standard rule of 6 months, 12 months, 36 months, or whatever. So that doesn't work, right? Now, the third thing that I want you to remember is most people start journey pretty clueless, right? They somehow know in the back of their mind that they need to save for uh, a certain reason, but they won't be able to identify what reason that is. If you think that you don't have any financial goal in life, there is always one goal that you'll have to prepare for, and that's retirement, right? So that's a common goal with everybody, you, me, and everyone else watching this video, right? We all want to retire at some point, and uh, and the day we retire, we need to figure out how much money we need as a retirement corpus. So, so if not for any goal, retirement is a reality. Plan for that day right from the start of your career. You may be surprised to hear this, but let's say a typical working age for a person is 25 working years, right? During which you earn. While 25 years may seem long, if you look at it from a month perspective, it's just 300 months. So 300 months is all you've got to earn and save for your retirement. So be aware of that. Start early, and plan well for your retirement, and that will take you a long way, right? uh, the last thing that I want to touch upon before we open this up for Q&A is at some point in your life, look at owning a asset which will give you an asymmetric return. What do I mean by asymmetric return? Asymmetric return is anything that can give you abnormal returns like 100%, 200%, or one of those ugly numbers, right? Now, why do we need that? We need that because it accelerates our uh, journey towards saving for retirement and whatever other long-term financial goals that we have. Uh, is it possible to own these assets? Yes, it is possible. Uh, Maybe you can, once you settle down in your life, maybe when you've got a steady stream of income, you can probably look at investing in stocks directly. Stocks do tend to give you asymmetric returns, but that requires a lot of hard work, effort, and diligence from your side. But if you do all the things correctly, then the odds of you owning that asset which can give you an asymmetric return increases. Now, it need not be an stock itself. It can be, let's say, a piece of land that you buy, and uh, and at some point in your life you sell that for a higher return, right? So that's again an example of an asymmetric return. Uh, of course, all the cryptocurrency and stuff, people talk about it and talk about all the gains that they've made, but I wouldn't really encourage investments there because it's still not regulatorily approved in India. So I personally would stay away from that. Uh, Things like, let's say you join a startup, and the startup gives you ESOPs, right? So and the journey goes well, and at some point your company lists. So that's another example of owning a private asset capable of giving you an asymmetric return, right? So look for such opportunities through your career and try and own uh, an asset which can give you this asymmetric return, and that will propel you to a great degree in your investment journey for retirement. Right? So yeah, with these four things, I'll stop here, and I would love to get started on the Q&A that you guys have got.
Thank you so much. So that was a great introduction to the personal finance. So I think anyone who doesn't have much background about this, so they would have got a quite good idea. So let's start with the Q&A. So I welcome Nandu, our co-founder, to us take up this session.
Good evening, all. Am I audible?
Yeah, Nandu,
Yes,
you
yes.
are.
Yeah, thank you. So now let's have some of the questions raised by some of our applicants. One of the question was like, what one should do if he or she is going to invest more than 50% in a single asset business?
Sorry, can you please repeat that? I
Yeah,
lost.
sure. What one should do if he or she is going to invest more than 50% in a single asset or a business?
Okay. So this is a case of a concentrated portfolio, right? Uh, what do I mean by concentrated portfolio? It simply means that a large part of your saving is concentrated on a single asset, right? Which is the case here, where the person's wanting to invest 50% of the saving in one asset. This is fine. We've all experienced something like this directly or indirectly. For example, think about elders in the family who've always owned a piece of land, and a bulk of their net worth was tied to that piece of land, right? So that is a concentrated portfolio where all their assets were tied to one single thing, and that piece of land would have appreciated in value over time and given them great results. I mean, we may have experienced this directly in the family or through friends or relatives or whatever. Right? So it's okay to do that, but the only condition here is that you need to have absolute conviction on that asset. Now, if you're not convinced that this piece of asset will uh, do well, right? Or if you're not uh, completely aware of all the risks involved in investing in that asset, then you shouldn't be doing it, right? So you should be spreading out your risk and investing in multiple assets with a hope that one of the investments will do well vis-a-vis the other investments, right? So so it really depends on your conviction on that asset.
Okay, thank you, sir. So that was a question by Surbhit Vyas from Benares Hindu University.
Okay.
Now, Mohan Naik from Bangalore Ambedkar School is asking, like, what's your best advice for early investors? Can you draw some any life in lessons for the young from your own experiences?
Yeah. See, the fact that you're asking this question itself is very encouraging because you're thinking about investment at a very young age, right? One of the biggest regrets I have personally for my in my own investment journey is that I didn't start early, right? In my own scheme of things, I started late. I think my first SIP was when I was around 26 years old. I think I did a SIP in a mutual fund, a mid cap mutual fund, which has done phenomenally well, right? Uh, but I started late. Investment amount was low, so there is nothing. I mean, it's although return wise it looks spectacular, it's not uh, a life changing amount that I've gathered till this point. I wish I had started a little early. I wish I had invested more than what I have, right? And reflecting back, I think I could have done that, but I didn't do that. So start early, stick to a plan, identify the goal and stick to that plan, and invest in it no matter what. So the biggest luxury that the market gives you is time, which you have as a young investor today. So leverage that to the maximum.
Okay. So Navneet is asking, what according to you is the right strategy to select the stocks?
See, there are multiple ways to select a stock. The biggest criteria is what is the time frame you're looking at. If you tell me the time frame is next 30 minutes, then my selection criteria is will be based on the price action in the market, right? And that's like a template I can apply to 20 different stocks and still generate an idea. But if you tell me the time horizon is for a month, then that's a different template altogether. If you tell me the time horizon is for the next 5 years or 8 years, that's a different template altogether. So before actually asking this question, what you need to do is define the time frame
Okay.
and then identify the objective and pick stocks based on that.
Okay. So before going to some other question, let me ask, like, if anybody on the meet have any doubts or queries, can ask directly to Karthik sir. Yeah, sure, Anand.
Hi. Hi, Karthik.
Hey, hi Anand, how are you?
I'm fine. How are you?
Good.
Okay, I had this question for a longer time frame. If you are trying to select a stock, how would you do that?
Okay. Uh, Fine. So let's say by long time frame, I'm guessing you're talking about the
5 years?
investment opportunity. So 5 years plus 5, 8, 10 years kind of horizon, right? So,
Yes.
so to do this, the only tool that you have is the annual report of a company. And what do you do with the annual report? You need to be comfortable analyzing 3 to 4 different things. You
Okay.
need to be good at analyzing the P&L, balance sheet, cash flow, both on a current year basis and historical basis. You need to be able to understand the business from a moat perspective. What do I mean by that? For example, let's say if I'm picking up TCS, I would like to as an investor, understand how TCS is different uh, compared to, let's say, an Infosys or a Mindtree or a HCL, right? Uh,
Yes.
and what makes it unique, and why should I? What aspects of TCS stands out, and what compels me to invest in TCS as opposed to other companies, other peers, right? So this is extracting the moat of the business. So you need to be able to do that. You can do that by not just studying the annual report, but also studying the industry reports, studying the competitors' annual reports, what they think about the sector, what they think about the business prospects, right? So it's and finally, how well they're doing financially. Uh, do they have how good is the balance sheet? How good is their P&L cash position? Are they is the balance sheet leveraged? Is the balance sheet stressed? So these are the things that you need to look at. And and in fact, if you go to, I hope all of you are familiar with Zerodha Varsity. There's a module called Fundamental Analysis. Uh, there is a template that I've explained there, so you can use that template. This template is assuming that you're comfortable with reading an annual report. You can use that template and use that as a starting point to make long-term investments.
Thank you.
Welcome.
Nandu?
Yes, yes. Am I audible? Just lost the connection. Sorry. Am I audible?
Yes,
You
you
are,
are.
you are. Yeah.
Okay. Okay. So, any other questions from those who are attending the meeting on live? Yeah, since there are no more questions, you can ask in between also. So one of the question that I'm asking, like Avinash Vivedi from Bank of America is asking, are companies really using machine learning or AI technologies for trading in Indian stock market? If yes, then what level?
Yeah, I think I'm not sure, Abhishek, if you saw this post by our CTO. He had shared it on LinkedIn and social media. Twitter it was shared. Uh, the fact is, nobody that we know is using AI and ML in its right form to develop the capital markets. So there are two aspects. One is as service providers, uh, do you use AI ML to enhance the offering and service the client? So that is one aspect. Now, that's not happening in the industry, and I think our CTO had clarified that. The second is are traders and traders using AI ML to trade the market. A lot of people claim that, uh, but I don't know anyone personally doing that, nor have my colleagues and friends come across people who use uh, these AI ML techniques to trade the markets consistently. So, so I can't really talk on their behalf.
Okay, okay, got it. So there is one interesting question from Gaurav Nishant who is working with Amazon. So he's asking like he have been investing in the stock market for the last 5 years, and he had a decent profit till now, and many of his selected stocks are like 100% plus profit level. However, he's not sure that it is because of he's been analyzing properly or just luck sometimes, and he also feels like it's just speculation that and not investment. So did you get the same when you started trading? Like one day you feel like you are good at, and next day you feel like you are know nothing.
Yeah. So let me answer the easy question first. I think it's best to assume that we don't know anything, right? So because market is so vast, there's so many things to learn. There's so many aspects that you'll keep discovering as you spend quality time in markets. So it's best to assume that you know nothing and always go with an open mind. As far as Gaurav's success with markets are concerned, how many years has he been trading, Nandu? You mentioned the time frame, right?
Okay, sir. So the second
Yeah.
part you're asking.
No, you said Gaurav's been making 100% returns. So for how long has he been investing?
Yeah, he's selling throughout the period.
Period of
5 years.
5 years. Okay. So yeah, I think if not, I don't know on what basis you've selected stocks, but if you've bought stocks and sat on it or sat on that portfolio for 5 years, then I think you should give a pat on your back because it's not easy to sit on stocks that have generated 100% returns and still be patient and uh, stayed invested throughout, especially considering what happened in March 2020, right? So, but if you've seen through all that stuff and not reacted to it, and if you're continuing to hold, then give yourself a pat on the back on your back, and I think it's a phenomenal thing to stay invested and continue the journey, right? As far as whether it's an outcome of luck or due diligence, that really depends on what stocks he has and on what thesis he bought and many different aspects. But having
Yes, sir.
said that, give always give credit to luck, no matter how brilliant you are. That's the safest way to assume and safest thing to assume and move forward in the markets.
Yes, sir. So adding to that, let me ask one small doubt. So how long we can give credit to the luck given the sustainability of our investment?
I was watching uh, Warren Buffett's interview recently, where he said he would like to attribute a large part of his success to luck. So if he's saying that, I don't know what we should be thinking.
Okay, okay, thanks. Okay, so one another question from Shreya Shah, who is a student at Terry School of Advanced Studies. Like, how to know when is the right time to sell your shares that you have been holding for last 9 to 10 months for the purpose of long-term investing?
So there is a lot of contradiction in that question. First of all, 9 to 10 months is not long term.
Yeah.
So I think the definition of long term should change. It should be 9 to 10 years.
Yes.
So 9 to 10 months is short term in my perspective. So even from the taxes perspective, it is short term. You will get short term capital gains there. So that's not long term at all. Uh, so assuming instead of 9 to 10 months, so the question is 9 to 10 years. Now, the answer to that depends on why you bought the stock in the first place. Now, before you buy a stock, you should have a thesis, right? You should have a thesis based on which you would have bought the stock. The thesis could indicate that you bought the stock for reason A, B, and C. Now, as long as those reasons continues to exist, right, you will be an investor in that stock. The moment that thesis starts to break down and it no longer holds, then you exit the stock, right? So, you invest with a general idea that you're going to stay invested for the long term, as long as those theses holds up. But after 4 or 5 years that you hold, the thesis no longer holds, then get rid of it.
Okay. Yeah, we have some questions from YouTube too. So one question is like, do you think there would be a fall in the equity markets when the central banks turn hawkish in nature?
See, these are all very speculative, you know, talks. It could be hawkish. There could be all sorts of central bank action, but market can fall. Who knows, right? 1 hour it may fall, and then suddenly someone feels that market has bottomed out. They will buy. So, what will you do with that? Uh, Point of view? You can't really predict these things.
Okay, so there is a question which is more seems to be more personal in answer. Like, you were one of the few who had joined Zerodha at its early stages of growth. So basically, what was your reason to join a startup at that point of your life?
Uh, I joined Zerodha formally when 3 4 years after it was came into existence. Uh, so I think for me one of the reasons, biggest reason was people working at Zerodha were more of uh, friends, and there was a certain comfort working there. Uh, and, and we all had traded before Zerodha came into existence. There was a bond, there was a connect. So I just wanted to uh, get back there and contribute whatever I can in making Zerodha a success. So that was the reason why I got back.
Okay. So, considering the huge falls in the market, should one consider investing in mutual funds, SIPs, or continue investing in stocks like Deepak Nitrate in the hope of an uptrend?
Sorry, can you please repeat that? I
Yeah,
lost
sure,
you.
sure, sure, sure. Considering the huge falls in the market, should one consider investing in mutual funds, SIPs, or continue investing in stocks like Deepak Nitrate in the hope of an uptrend?
First and foremost, I think what we've seen over the last 1 week is not a huge fall in
Hmm.
any measure, right? It's like a nip in the bud. It's not a huge fall, but assume March 2020 repeats, right? Which was a fairly large, steep fall. So I would suggest you stick to your SIP plans. Don't divert from that. In fact, these are good times to accumulate and continue your journey. So don't get too worked up on timing the market. Nobody's ever got it right, and even if they've got it right, it's only uh, by probably luck or fluke or whatever.
Hmm.
You can't time the market consistently. So if you get into this spiral of timing the market, then I think you have more to lose than to gain.
Yeah. So one another question from the YouTube live, like what's your opinion on averaging? How can one decide when to average the stocks? Do you follow any criterion for averaging your portfolios?
There are two types of averaging. One is averaging on the downside. The other one is averaging on the upside, right? So as a basic rule, don't average on the downside. That's like throwing good money at a bad stock, right? So if your stock is going down, don't try to be smart and average out on a losing proposition. So that doesn't work. So chances, the odds of that stock going lower and your losses mounting is very high. Whereas if you want to average out on the upside. So let me give you an example. Let's say I buy a stock at 100 rupees, and the stock has rallied to, let's say, 130 or 140 rupees. I'll be happy to buy a little more of that, provided I have the cash, and average out my buy price on the higher side, right? So this is throwing good money at a good stock, which is fine, but don't average on the downside.
Okay.
So,
So one.
in fact, one of the things that I've always done with you know investments and short-term trading also is to average on the upside, and that's 9 out of 10 times done a decent job.
Oh, yeah. One another question regarding cryptocurrency. Like in the last few years, a lot of cryptocurrency exchanges are coming up and gaining customers. So unlike stockbroking, he doubts whether these changes are legally registered under government or any regulatory bodies. So if we buy a share, we know that our stock will be held in CDSL or NSDL. But in the case of cryptos, how can we assure that the exchanges had actually bought some cryptos using the money we paid? There are
That is
chances for
the
unregulated changes, exchanges, isn't
yeah.
it?
So there are no there are no regulatory bodies governing what these exchanges are supposed to be doing. Right? Now, if there was a governing body, if there was a regulator, that contradicts the whole aspect of a decentralized exchange and currency, right? So that doesn't go hand in hand. So unless and until there is a regulatory framework for this, uh, it doesn't make sense to look at these investments. I know it's a very unpopular opinion because a lot of people have opened crypto trading accounts and invested in
Hmm.
cryptos. But this is what I feel. As long as there is no regulation, as long as there is no uh, regulatory framework, I would avoid investing in such assets.
Yes, sir. So one more question, like, what's your advice on savings and investment to young people?
Um, See, like I mentioned earlier, I think if you are starting your journey, you should, I mean, if you're thinking about saving, you should start earlier in life because the only luxury that a market gives you is time, and
Hmm.
make good use of it by starting early. Like I mentioned earlier, one of my biggest regrets financially is I've not started early. I wish I could go back in time and correct that mistake, but unfortunately I can't. But that's fine. I mean, so start early. Uh, Identify that time is a critical aspect. Save as much as possible. Remember, if you have X amount of income, income minus saving is your should be your expenses, not income minus expense equal to your saving, right? So keep that in perspective and identify goals. Everybody has one single goal, that is retirement. So don't ignore. Start building
So
towards
the
that.
pri-
Sorry.
okay,
You have
am I
been.
audible? Yeah, yeah. So how does quantitative trading work? Like you said, if we give a good weight for luck, how accurate can be this even?
Quantitative trading at the end of the day is a set of rules that you identify. It's just that the rules are quantitative in nature. Let me give you an example. Um, Moving average system, right? It's end of the day is a quantitative trading technique itself. All I'm trying to do with the moving average system is to buy a stock if uh, a stock price crosses a certain moving average level, and sell the stock if it crosses below a certain moving average, right? So these, since it is number based, it is quantitative aspect. If you clearly define the rule, codify it, and make a algo out of it, then that's a quant strategy. So now the accuracy of that strategy really depends on how well you define your quantitative parameters. So
Okay. So I guess Anand is having one more question. Anand, you can go ahead.
sure, okay.
How do you hedge your portfolios with year-end options, and how will it help you growing?
Sorry, I can you please repeat that question again?
How do you hedge your portfolio with year-end options, like December 2022 or December 2023?
Okay,
And,
so
and the
these not
premiums
necessary.
pertaining to them are really expensive
Yeah.
due to the time being.
So yeah. So Anand, these are not really year-end options. These are long-dated options, also called leaps, right? For example, let's say there is a September 2023 contract available. So that's also a leap. So anyway, so not getting into the technicalities of when the option is dated. There are long dated options that are available, and you can buy them to hedge your portfolio, like you said. But the biggest issue here is liquidity. Now, it's not as popular as a weekly option. Uh, the trading activity on this is low, and therefore the premium that it has are extremely skewed, right? So it's difficult to price these options accurately, and which means to say it's not an effective tool to hedge your portfolio because you'll be paying way more than its actual true price because of the absence of liquidity, because of absence of trading activity, because of whatever reason. These are not priced accurately, and if you're buying them, chances are that you'll just lose out on the premium without really benefiting out of it. So, if at all the idea is to hedge your portfolio, use shorter dated options. Much better to hedge.
But we do not know when the markets will fall, or we do not know how will the markets react.
No, when you're buying a year-end option, there is an implicit assumption that the market will fall by year-end,
Yes.
right?
That
So how
that's
you?
the 5% cost for the portfolio. But when you're buying weekly options or monthly options, if there is a major event, the matter changes. But if there's no event, and
Yeah, but how do you know that there will be an event by year-end?
maybe like the elections in the
So
2009.
so this is not a year-end event. This is a specific event then. So you're hedging against a specific event, right? So so when if you have a specific event in mind and you want to hedge as per to that event, then I would suggest you buy an option which is closer to that event date if it is available. Otherwise, you would just be paying a lot more premium for no particular reason.
I get that.
So one last question. So could you share any tips on personal finance and money management, like wrapping up everything?
Um, See, I think we discussed a lot during
Hmm.
this Q&A, and I pretty much shared whatever I think I can related to personal finance. So, um, see, the single most important thing, I can't stress the importance of starting early. So, if you can do that, uh, please do it and start earlier in your life. Mm, Pick, you know, pick mutual funds. Mutual funds are an excellent vehicle for investment. Take equity risk early in your life because you can afford to do that. Pick a couple of funds and stay invested in them. Review your fund probably once a year and see how it's performing compared to its peers. And do a. I know this is simple, boring advice, but I think this is an advice that works. We've seen this over multiple market cycles. We've seen this for a few decades now. It's time tested. Uh, Stick to it, uh, and I think that will work for you, and for it will work for everybody actually. Uh, don't ignore the the possibility of owning a asset which will give you an asymmetric return.
Hmm.
Keep that in mind. Always look for those opportunities.
Okay, thank you, sir. So before winding up this Q&A section, let me ask anybody left out there in the meeting has any queries or doubts, can directly ask now itself.
So I have one quick doubt, sir. Like, actually, you were mentioning about crypto initially, and you were suggesting about RBI's policy, which may lead to a crisis in the area. But like, do you anticipate a bigger crisis in the stock market of India, because there are plenty of people who are like small traders are like engaging in cryptocurrency trading. Like, will that cause something greater in the economy in a later phase when something happens?
No, no, I don't think so because see whatever numbers that have come, I think the investments in crypto is not much, right? So not to an extent where it will cause a ripple in the economy. So, but if it gets to that and has a spiraling effect, I'm sure the regulators would kick in and put some checks and balances in place. So yeah.
Any more questions? Yes, I think there are no more questions to clear. So now
Sure.
I invite, yeah, now I invite Naveen.
Hello, am I audible?
You are
Yeah.
Naveen. Yeah.
Yeah, yeah. So thank you so much, sir, for accepting our invitation and for giving us a very good informative talk. Plus, clearing a lot of doubts from our members and general public. So I hope everyone enjoyed the session as well. So and also, I would like to thank all the participants who registered for this event for taking some time from your life for this great event. And also, our members, there are other members as well in our team, like around 8, 10 lead members are there, and also some couple of interns too from various universities across India. So they have put a lot of efforts in making the beautiful posters, then doing promotions, etc. So yeah, so that's it. So have a nice day.
Thank you so much.
Yeah, thank you. Shall close the live.
Sure. Yeah. I'll disconnect.
Yes,
Sure,
yes.
sure, sure, sure. Yeah,
Thank
thank
you.
you.
Thank you, sir. Thank you.